Welcome to the deep dive. Today, we're taking a really interesting look kind of under the hood at one crypto investor's thinking right now.
Yeah, we've got this personal account. It's called vo na your txt.
Right. And it gives us this real, like, fly on the wall view of someone actually navigating Bitcoin, altcoins, all that.
Exactly.
So, our mission here is basically to unpack how this person is thinking, what moves they're considering, and, the big questions they're asking themselves.
It's just one person's perspective, of course, not financial advice, none of that.
Definitely not. But it's still fascinating to see how someone is actually, playing the game right now.
Totally. These kinds of firsthand accounts, they're gold because you see the real emotions, the practical stuff that drives decisions.
Yeah, it's one thing to read like market reports.
Mhm.
It's another to see someone putting their own money on the line, dealing with all the uncertainty.
Okay, so where are they at right now, this author?
Well, get this. They've apparently made a 5x return on their investment, doubling it year over year. Pretty good, you'd think.
You'd think. They even mentioned Lambo time, the classic crypto dream. But there's this feeling of, I could have made millions. It just shows you the mental game of crypto, doesn't it?
It really does. Even making good money might not feel like enough when you see those crazy potential numbers flying around.
Exactly. So that plays into how they see this recent pump in prices.
Yeah, they're cautious. Very cautious. Calling it late, thinks it probably won't last.
But they admit they could be wrong, right? They added that disclaimer.
Oh, yeah. Nah, I might be wrong. So they're hedging a bit. They say they're happy with the pump, but definitely not excited.
That sounds like someone leaning on past experience, maybe bracing for a familiar pattern.
Which brings us neatly to their summer doldrums theory. This is where it gets really interesting.
Okay.
They've got this whole idea about how the market behaves over the summer months based on what they've seen before.
And it's different from what others are saying.
Totally different. They're saying, like, May's okay. June tends to dip. July, you get a bit of false hope thinking, we are back.
Uh-huh.
Only for it to slide into August and then, bam, a dump in September. That's their playbook for the next few months.
Interesting. So they're mapping out a seasonal pattern?
Yeah, and
Yeah.
it flies in the face of, some influencers talking about a 90-day banana zone of huge gains.
Right. And that idea of market seasonality, while maybe anecdotal for one person, it does sometimes track with lower retail activity in summer.
Yeah.
Could lead to, less volume, maybe choppier prices.
Makes sense. They also mention high PTSD levels in the market.
Wow, that's a strong phrase.
Isn't it? But it captures how past crashes, like, leave scars, people get jumpy. It affects how they react now.
That's a really good point. That memory of big drops, it can definitely make people more risk-averse, even when things look good on the surface. It's like a psychological break.
Okay, so with that whole summer doldrums idea in mind, they've got this simple playbook they're using.
Right, putting the theory into action.
Exactly. They give an example. They bought something called the Donald Dip. Apparently picked up about $600 worth of some asset when the price dropped on some Trump-related news, I guess.
Okay. Trading the news sentiment.
Yeah.
Yeah.
And then when the price bounced back the Trump pump, they sold enough to get their $600 back.
Okay, so they recovered their initial stake.
And kept the profit, maybe 20–30%, in the actual tokens. Smart little trade.
Tactical. Short term. Based on predicting sentiment swings.
And they're ready for two main outcomes now. If things go nuts, like a parabolic,
Yeah, straight up.
those profits could multiply like crazy and maybe 10x what they put in.
Okay, potential big upside.
But if their summer dip theory plays out, they're ready to buy more during that August-September slump they expect.
So they're playing both sides, in a way.
Yeah.
Ready to catch the wave if it comes, but also planning to accumulate if it drops.
Seems like it. And it's all based on this longer-term view that the real market top, the blow-off top, is still maybe a Q4 this year, or even pushing into early 2026.
That makes sense. If you think the big peak is still ways off, buying dips looks attractive. It's a mix of opportunism and risk management.
Now, here's another twist. Their original plan, apparently, was to be mostly out of crypto by May of this year.
Oh, really? So they planned an earlier exit.
Yeah, but they couldn't quite sell off their altcoins that they wanted, so they've extended their whole investment horizon. They call it their holiday by another year, now aiming for May 2026.
Okay. That shows you it's hard to time exits perfectly, especially with, less liquid altcoins. They can swing wildly.
Definitely. So right now, portfolio-wise, they're sitting on about 33% in stablecoins.
Okay, a decent cash position.
And they might bring that down to maybe 25% over the summer, depending on how their trades go.
Makes sense.
But the main goal, the absolute bottom line for them, is getting their initial investment out, just like they did back in December 2021.
That's a key risk management move. Secure the principal.
Mm-hmm. Takes the pressure off, right? They mentioned that last cycle, they turned about $2 of 5K into roughly $14, like a 5.6x return.
Nice.
This cycle, they put in more, about $6 and 5K total. And it's currently worth around 32K, so that's about a 5x gain again.
Pretty consistent.
So the immediate target, get that $6 5K back out.
Yeah, lock in that initial capital. Then whatever's left is pure house money, basically. Makes it easier to ride out volatility.
Okay, but now, the big one, Bitcoin.
Ah, yes, the elephant in the room.
They seem pretty set on selling all their altcoins by that May 2026 deadline. They talk about avoiding the endless pain of holding alts through a bear market. Been there, done that, apparently.
Can't blame them. Altcoins can get absolutely crushed, way more than Bitcoin often, after a market peak. Exiting them systematically makes sense if you want to avoid that potential drawdown.
But Bitcoin, that's the puzzle. They're really wrestling with it. Should they sell it too? Because
Let's
historically...
Big drops. After the peaks, Bitcoin has historically fallen, what, 70, 75%?
Exactly. They even pencil it out. If Bitcoin hits, say, 120K or 130K at the top, a 70% drop takes you back down to around $40 case.
Oof. Yeah, that's a significant correction. And history suggests it's possible.
But then they bring up the counter arguments. You know, all the new stuff. Institutions getting in. Countries maybe holding it. The ETFs.
Right. Could those things actually change the cycle this time? Is it different now?
That's the million-dollar question, isn't it?
It really is.
Mm.
Are those historical patterns still valid when you have, like, massive institutional flows and easier access through ETFs? Maybe those buyers are stickier, longer-term holders?
Or maybe not. Maybe human psychology, fear, and greed still wins out in the end.
It's a genuine uncertainty. The author clearly sees both sides, the historical precedent versus the potentially new market structure.
So where do they land on Bitcoin? Their final thought seems to be, stay in the game, take profit, and buy when there is blood in the streets.
Okay, so ultimately still long-term bullish on Bitcoin itself.
Yeah, sounds like it. Even if they expect a big drop, they're not planning to just sell it all and walk away forever. It's more like manage the position, take some chips off the table.
And be ready to buy back in if prices do crash hard. It's active management based on a long-term belief, but acknowledging the short-term risks. Pragmatic.
So wrapping this all up, what we see is someone who's cautiously optimistic. They're really leaning on their past experiences, these historical patterns they've noticed.
And they've got a clear trading plan for the near term, especially around this summer doldrums idea.
But that huge question mark remains over Bitcoin's long-term path after the next peak. They admitted themselves, right? You never know the smartest move.
Absolutely. And that struggle, between history and is this time different? Yeah, that's basically the whole crypto market right now. Everyone's grappling with that.
So for you listening, think about this person's approach. The mix of personal history, market patterns, active trading, and that big Bitcoin question. What factors do you think will really shape this next cycle? Are those old patterns still the best guide?
Or has the game fundamentally changed with all the new players and products? Something to chew on for sure as things keep evolving.